Hello traders, this is day 94 of small cap market open test trading. We've taken 95 trades so far, so we took 2 trades today. We want to take that to 100 before we finish the test. And today was another strange day in the small cap market, and I'll show you exactly what I mean by that. So this is my small cap screener. I have the list organized by volume. We have RBAC here at the number 1 volume stock being traded in the small cap sector, and it was a very strange sideways mover. We weren't trading it, but we did have it on our charts page because it did meet the screener and daily chart criteria. KOD was not up there while we were trading. WTI was the one that we did trade, and you can see everything else is pretty much red or low volume. These now meet our daily chart criteria as far as volume is concerned, but they didn't earlier. So anyway, let's get to the video and we'll see what I was looking at and why and what I traded. So you can see at this moment there was nothing on the charts, and then here's WTI. I pulled that up on the chart. Let me show you. Here it is on the daily chart. So obviously it's above the 200 MA, a bunch of old lines from previous trades. So I'm just getting rid of those. And that yellow line is the first level that I want to see WTI break above. So I set an alert there, and the alert gets triggered, and RBAC pops up on the screener. So this is the one that was really kind of odd. I'm not sure if I got to the daily chart on it yet. Okay, well anyway, WTI was moving pretty well. I'm backing up a little bit here. So the second yellow line represents the first high of day after breaking through the previous high, and this one was kind of a weird mover. This happens sometimes, especially with these. I'm going to call this one a lower volume stock because the top stocks in the small cap sector were trading with lowish volume. This one was like number 7 on the list. So the top 7 volume traded stock on the small cap sector. Sounds like it'd be a lot of volume, but it really wasn't, and it wasn't moving like it had a lot of volume. But again, it met all of the criteria, so I must watch it. I must take a trade. There are plenty of times where these trades do work out, so I can't be subjective in my trading and just say, well, today looks kind of weird and let me not trade, because there have been plenty of days that look kind of weird and I trade and the trade works. So just trying to keep things as objective as possible and systematic as possible. So this thing double tops right here, so that counts as a high because a double top is resistance, and if the price breaks out above that level, then that becomes a real high, so an actual high of day, I should say. And that's so CMAX popped up as well on the screener but did not meet the daily chart criteria. All right, now we're waiting for WTI to make the second high of day, and that's where this white line is going to end up, which is right there at 723. And now we're waiting for the first 1 minute candle to make a new high before we take our entry. So this thing traded sideways here, consolidated basically, and then we're waiting for 721. So there it goes. Let me show you that live. So here's 720. We're watching the price bubble. We're looking for 721 there. You can see it just shoots right through 721, hits 722. We actually got filled at 721.5. And I trigger my hotkeys immediately as it pops and get that 722 fill, which is only 1 cent slippage. And generally, that's a good sign. That means that there's a lot of buyers getting in at that same spot, that same price. And that's what you want, because that means there's likely going to be momentum. But of course, nothing is guaranteed. That's why we use stop losses. I move that stop loss right away to the low of the consolidation area. And then I get my price target in place, and then we're done with the trade. We just let the trade play out. So we're going to fast forward and we'll see what happened. This is trade number 1 of the day. I was showing you here live on the live while I was recording where WTI is on the screener. So there you can see it's number 7, top 7, and the ones above it are all much worse looking on the chart. So it was the best small cap stock to be trading as far as the screener criteria and the chart criteria. I see KOD up there now, but that was not up there when I was looking at WTI. So it must have popped up between me getting triggered and something like that. I'm not sure. But anyway, this one was the one that we chose to trade. And once you have decided on a stock to trade, you just stick with it and you don't go to other stocks, even if you have your screener open and you see something else pop up. So anyway, we are in this trade and you could see that it's just kind of moving slow. And there we get stopped out. Let me just show you that live. There we go. Stopped out, so we lost the first trade, and now we have to decide where our moment of weakness is, which ultimately I decided was the low of these two candles. That was really the right thing to do, even though I have the red line over here. So we aren't going to take any trades if the price drops below that level. And the reason why that is because remember how I said that this double top is a resistance level and it breaks out above that? So that basically means that this is where our ABCD pattern starts, is right here. A, B, and then C is down here. And then we got triggered to take the first 1 minute candle to make a new high. And if that point A gets broken, then that's it. The stock is considered weak by my trading plan. So we don't take any more trades if that happens. But you can see here, let me show you where I got triggered into the next trade. So we're waiting for 720 at this moment. It should happen any second now. There we go, 720. I trigger my hotkeys. I get filled exactly where I want to. And now I'm got to move my stop loss. I'm not sure why that popped up. Got to move my stop loss up. Probably because I clicked that box instead of closed it. Something like that. Anyway, stop loss is in place. I'm going to get the profit target in place. And then the trade is all done. This is trade number 2. So here's some energy pushing the price up. But again, nothing is guaranteed. So that's why we have these bracket orders and the stop loss out, because we don't know if this thing can reverse and come back down and stop us out. So there's 725 or 5 cents shy. We're basically halfway to our profit target at this point. So that would be a 1R trade, which we're not interested in. We're only at this moment in time, we're interested in 2R trades for the testing. And we're also tracking the 3R target. And that's what we're going to do when we put this into full position size. We're going to be holding to 3R on every single trade because we found that to be much more profitable. So let's see. So now we just get stopped out just like that. So this is what happens sometimes. Nothing is 100%. Nothing is guaranteed. That's why we use stop losses. So this goes down as a minus 2R day, but we are still up 17R total on our test trading. So we've got plenty of wiggle room here. We only have 5 more trades to go till we get that 100 trades. And then we're all done with the test trading. So at least we were able to collect some data today, and we have 95 trades now and just 2 more to go. So as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.